Valuing an AI startup is different from valuing other startups. You have to demonstrate that there is indeed a market for the AI tool that you are proposing to provide. The company's going to have either a proprietary machine learning algorithm, a proprietary large language model, or they're going to have proprietary access to data that is going to be used to train the machine learning algorithm. Artificial intelligence is software that is intended to replicate the thinking or functioning of the human mind. A large language model is a software that can produce its answers using natural human language. It allows human beings to interact with an artificial intelligence platform as if we were speaking to another human being, which democratized artificial intelligence. The AI space is tricky because we don't know a lot yet. It's such a nascent space with tremendous growth, tremendous opportunity, tremendous potential. And there's a lot more we don't know than we do know about the market. If you're a startup in the AI space, I think you need to do two things. You need to super define your niche with scalpel-like, laser-like precision. It is absolutely critical that a new entrepreneur in AI has their sights on an important, painful problem you're going to solve for the market. And it really gets down to product market fit. And the best way to do that is to survey customers, do the hard legwork of customer discovery, show a path to profitability. Investors are not willing to invest in a story that says, we're just going to lose money for 5 or 6 years, we're going to grow really big, and then once that happens, we're going to start to make money. To distinguish yourself, you've got to have a clear path to profitability, if not profitability already. The need should come before the invention, not the invention before the need. You shouldn't be starting an AI company any more than you should be starting a SaaS company, a biotech company, a materials science company. Rather, you should be starting a company that is solving a specific problem that AI turns out to be the most effective tool to solve. Always position yourself as a solution provider, and perhaps your most important tool, your most powerful tool in your toolbox is something that is an artificial intelligence application or appliance that you created. You simply must embrace is the need for data hygiene, which means your data needs to be recent, it needs to be complete, well organized, defined, and marked. Generally speaking, artificial intelligence will be much more effective if it's relying upon a small data set that has impeccable hygiene than a large data set or ultra large data set that has minimal. I think the most common reason that an AI startup fails is because they developed the technology first, then went looking for a problem to solve. I've seen companies in this situation is they invent an artificial intelligence technology. It works great, but there's no obvious problem to solve with it, or at least no problem that is so painful that a large segment of the market is willing to pay a lot of money to solve it using the AI tool. And this is why I get back to, I think starting an AI company is a mistake. What's not a mistake is to start a company that solves a problem. And if AI happens to be the solution to that problem, great. If you're an AI startup, we can help you establish a reasonable range of value for your company so that you don't leave a lot of money on the table if you accept a valuation that's too low, and you don't scare a lot of investors away with a high valuation that investors think is not credible. We can help companies put themselves in the best decision they can by making the right decisions to ensure that their company is as attractive to potential acquirers as possible, so that when the time is right for them to sell their company, they're able to do so relatively quickly and to achieve the market price that they deserve. We can also help you with your compliance around stock option valuation. We can help you with understanding your valuation as you raise successive rounds of capital. And when you're ready to exit, we're there too. And we can help you by making sure that you take the deal that you should and you don't try to get a deal that's not realistic.